When Sumit reaches the bank branch for the final paperwork of his unapproved home loan of 3 million, he was taken aback. Sumit approaches a bank officer. Important documents were lying on the table. Sumit was really confused. Sumit said to Mr. Sharma that he never told him about this before. He already had insurance. Why should he buy again now? The bank officer says they were not asking him to purchase any separate insurance. This was related to his home loan and is for the protection of his loan payment. Sumit asks what if he doesn't buy the policy. The bank officer says it is compulsory. Otherwise, Sumit won't get a home loan. Sumit replies that he already has an insurance. Why does he need to buy another one? He was thinking of buying a home insurance, but his hands are tied at the moment. The bank officer asked Sumit why was he thinking so much. Bank is giving him a complete insurance package. It will be beneficial for him. The bank will not let him suffer any losses. The officer asked Sumit to have a look at the benefits. It includes his health cover, his home will be insured, and God forbid, if anything happens to him, the burden of the loan will not fall on his wife and children. It's all in one. Everything will be covered.
Mr. Sharma here is sounding more like an insurance agent than a bank manager. Although it is necessary for Sumit to buy an insurance policy, it is not necessary to buy that policy from the same bank from where he has applied for the loan. There is no such rule that says that you must buy insurance from the same bank where you have applied for the home loan. If a bank or non-banking finance company forces the customer to buy insurance policy along with the loan, the customer has the right to refuse.
If you do not buy insurance, then the bank cannot reject your application for the loan. The bank may request you to purchase insurance but cannot force you. This has become a common practice. Banks are interested in selling insurance by inserting a condition that you also have to buy insurance policy in approval process of home loans. The insurance premium is added to the loan amount. Banks claim that you will not get insurance cheaper anywhere else. If Sumit fills out the insurance package, he will have to pay 1 lakh rupees on loan of 30 lakh rupees. So, the loan amount will increase to 31 lakh rupees. At an interest rate of 8.5%, the EMI for 20 years will be about 27,000 rupees. The bank will collect interest on both the principal amount and the insurance amount. The bank pays the insurance company in advance for the year. The premium is included in the principal amount. Banks keep collecting interest on the total principal amount from the borrower. The Insurance Regulatory and Development Authority IRDA annual report shows that in the year 2021-22, 31 policies were misrepresented for every 10,000 policies sold. This means that policies were sold by lying and in the wrong way. Banks had the highest number of mis-selling incidents. Sometimes insurance was sold in the name of fixed deposits. Sometimes policies were forced upon customers by saying it was mandatory with home loans. Not only that, the Finance Ministry has reprimanded government banks for mis-selling insurance policies. Then, the Central Vigilance Commission or CVC was angry about the way in which banks were selling policies. Banks used to put pressure on their staff to sell insurance, and on top of that, the commission found bank managers would say anything to sell insurance. But shouldn't insurance be taken from banks? If the borrower dies unexpectedly, the responsibility for repaying the loan falls on the family. If the family is unable to repay the loan, they may even lose ownership of their property. You can cover this financial risk with a term plan, that is, life insurance. In a term plan, the policyholder's family receives a lump sum amount if the policyholder dies. In such a case, the term plan cover should be enough to cover the loan amount and the family's daily expenses during tough times.
सो जब भी हम टर्म इंश्योरेंस की बात करते हैं लोन के थ्रू, तो ये बात ध्यान में रखना जरूरी है कि बैंक आपको फोर्स नहीं कर सकता है आपको अपना कवरेज, जो मान लीजिए कि आपने पहले से ही ज्यादा टर्म इंश्योरेंस लिया है और आपके वो बाकी के गोल्स को सफाइस कर रहा है और लोन को भी सफाइस करना है, तो आपको स्पेशली टर्म प्लान लेने की जरूरत नहीं होती है जो बैंक आपको लोन के साथ ऑफर करने की मजबूरी से या फोर्स करता है आपको। तो ये आपको बाय फोर्स नहीं लेना है, बाय चॉइस लेना है। मान लीजिए कि आपका लोन जो है वो 20 इयर्स का है और आपका टर्म इंश्योरेंस 10 इयर्स का ही है, तो आप लोगे तो भी एक लॉजिकल डिसीजन रहता है जब भी आप ये टर्म इंश्योरेंस खरीदते हो।
The primary job of a bank is to accept deposits and give loans. However, it seems that banks are showing more interest in selling insurance policies. This is because commissions from insurance sales serve as an additional source of income.
What should Sumit do? If Sumit already has sufficient life insurance coverage, then he should not take another policy under pressure from the bank. If the bank states it as a condition for loan approval, then Sumit should request a written statement from the bank that insurance is mandatory. He should also speak with the senior management of the bank. If there is no response, he can file a complaint with the banking ombudsman. Sumit should consider applying for a loan from another bank rather than dealing with a bank that indulges in such practices. However, it is important to be vigilant because the next bank might also ask for insurance as a mandatory requirement along with the home loan. Insurance is not mandatory with a home loan, but for the financial security of the family, one can opt for it separately.